Okay, what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, got another live trade to share with you on AUDJPY for around 176 pips. So again, full breakdown of this trade, entries, stop loss, targets, trade management, full analysis on the trade. So hopefully you guys can find some use in this. I do post all my trades on my Telegram channel, so feel free to go and check that out if you want to. Links in the description to that. But yeah, guys, not more needs to be said on this one, so we'll get straight into it. Okay, so welcome to the charts, people. So as you can see, I've got my trade set up there with the risk to reward short on AUDJPY for around 176 pips. So like I said, full breakdown on the trade coming up. So like always, starting on the higher time frames, building that bigger picture, understanding what the higher time frames are doing, taking that information into the lower time frames. So from a monthly perspective, everything is looking very, very bullish. So my overall bias on that is definitely to the upside, but after taking out some key levels here on the left and coming to some areas here on the right, I'm expecting to see some retracement. You know, in Forex markets, the market doesn't normally move in straight lines. You know, the market just doesn't fly forever or fall forever. You can see if I zoom out, it's a very up and down market. So after taking out some key levels, I'm expecting to see some retracement. Again, I still do expect the market to go higher because that's what the structure is saying. And I will remain overall bullish on the pair until that structure breaks and I see a reversal. But I'm expecting some retracement and I'm looking to take advantage of that. So from a higher time frame perspective, I know the market is bullish, but for my short term, immediate bias, I'm bearish, looking to take advantage of some retracement. Going into the weekly time frame, again, more wicks to the upside, big wicks there. As you can see, another exaggerated wicks to the upside, which is showing me signs of exhaustion. I'm expecting to see some retracement after that now. And on the daily chart, which is where I was really focusing on, you can see here, really big move to the upside. Normally when we get these exaggerated rallies, or when the market falls, bearish candle after bearish candle, bullish candle after bullish candle, not much retracement. There's a slight doji there, but overall the market was flying. It means that there's not a lot of structure to play with here. So I do expect the market to retrace the majority of this push. When I see pushes like this, I do expect to see the market follow up and retrace most of those moves. You can see here, big moves to the upside, not much structure in there. The market came around 70%, 75% of that retracement. You can see here, big moves to the upside, the market retraces all of that. Big moves to the downside here, the market retraces it. Big moves to the downside there, the market retraces it. So these patterns happen a lot of the time. So when I saw this move here, I'm already looking for shorts because I'm expecting the market to decline and retrace most of this. Again, overall bullish, but I'm expecting retracement. Very, very important. So as you can see, big move to the upside. We came down, retraced, and then we well could have gone bullish again, but the market failed very, very abruptly. Big push to the upside, stopped in the pin drop and came right back down to the downside. So I figured if the market was going to go bullish, we should have kept going here. This was just the market failing. Now I'm expecting to see another move to the downside, a bit of a bull flag pattern. So we've had our bullish leg here, impulse, which is this move, retracement, which is this move, the continuation to go higher but failing, which is this move, and us coming right back down again, which is this move. So I'm expecting the market to continue, give us that bull flag pattern, take out that low, which is that low there, and then potentially go bullish if we can snap through this high, which we haven't quite done yet. So the market still could decline, but if we do take out this high of entry, then we see that bull flag pattern happen, price come back to those highs, and probably see some higher highs as well. So the theory of the trade was I'm expecting to see another bearish leg to the downside, and targets were originally back down to this area. So I'm actually going to go over the management of the trade in a bit of detail just to show you guys, because my original target was up here, but I actually closed up there because I was reacting to what price was giving me. So I'll go over that in a second, but the original target was a pushback to this level. As you can see, prior resistance broke through, a lot of momentum, never came back for the retest. So I was looking for the market to come back and test that level. So that was the target. Entry wise, I was looking to get involved in these wicks because you can see the market here was throwing wicks to the upside, struggling to break through. Then we saw suddenly big momentum to the upside, the market came straight back down. So for me, this was already just a false break. False breaks normally a lot of momentum in one direction and then a lot of momentum in the opposite direction very, very quickly on a major level, trend line, supply and demand, something like that. So for me, this was a clear sign that the market was failing to break through, and we just had a false break of that level. So what I was really looking for was a head and shoulder pattern. This was our original resistance, false break to the upside, giving us the head, looking for that right shoulder for the drop to the downside. So this resistance here on the left, I was looking for it to hold again as resistance for moves to the downside, but I made sure to wait for a daily candle closure, which gave us this wick to the upside, because the market was throwing wicks here on the left, and I wanted to be safe because the trend is, you know, to the upside still. We definitely could have broke back above and continued to the upside. So I wanted to see the market give me a wick to the upside to show that, okay, from a daily perspective, a daily candlestick, we are still holding this as resistance, which happened on this day. So a big move to the upside, pullback. So I knew the following day, which was this day here, that doji, I was always looking to short as long as we hold that level as resistance. So on the 4H time frame, I can refine the level a little bit, just basically to this area here. So that was that prior day's move, came back down, and then I was looking for my entries, and my entry was on the hourly time frame, which is what I use to enter the market. So my entry was actually over here. So entries on that candle there, big wick to the upside, rejected it, came back down, gave me a bearish engulfing variation pattern. If you combine those 3 bearish candles there, nice wick to the upside. So that was my entry, stop loss above the zone, of course, just in case we were to pull back into that level, give myself enough room if the market wanted to have a deeper pullback, which actually did have a test. It just didn't, you know, go really into the zone, just briefly tested the zone, then fell. So a stop loss is above the zone, which is where I'm selling from. And then yeah, targets were actually down here, but the reason why I exited the trade early, so I was getting a sign that the market was reversing. Going to the 4H time frame, the way I look to manage my trades is I have the level of my target, level of entry, then I look for some levels where potentially the market might reverse and might not get to my area of target. And one of them was this wick here. Reason being, because this is the prior low of the market. We've got the high up here, we've got the low, lower high, and if the market fails to break through this lower low here, you would expect the market to reverse. And if I do drag that along, you can see actually that's exactly what happened. You know, the market got back above, respected it, big move to the upside, respected the second time, the third time as well briefly, and then flew to the upside. Reason being, it failed to take out that lower low. So that was my area I was going to manage, just in case the market held that, and my target was just below. So we did have originally a strong break of that level, so things were looking good. Expect the market to hit my target, but then we reversed and climbed back above the level, as you can see. So when I saw that happen, again, false break, not a really good sign. So I was looking to see if we can get back below, which we did briefly with this wick, and the market pulled up and closed as a bullish hammer candlestick. And you can see in the hourly, we actually got again another head and shoulder pattern here, inverse head and shoulder, I should say, left head and then the right. And then as soon as I got that close, I knew that most likely the market's going to head to the upside. Now I wasn't really trying to find out, you know, whether the market was just going to roll over and hit my target, or potentially pull back and stop me out break even, which it would have done. So I wasn't going to really risk, you know, losing 176 pips just to try and gain 100 more. So it didn't really make sense to me. So I took the profit there. The market did actually reverse, hit break even there, well, it would have done, and then eventually would have completely reversed as well. So yeah, managing the trade is definitely important. Make sure you do that, because even if you have very extended targets, like you're looking for 5 to 1, 6 to 1s, or even more, you do want to have some targets before that, at least to bank some partials or to react to some levels, because price, you know, the further your target, the less likely price is going to get there, of course. So make sure you do have out some pre-mapped out areas that if the market does show some strong signs of reversal here, you know, look to at least take some profit off or close the trade early, depending how you want to manage your trade. But yeah, that's the full breakdown of the trade, guys. Looking to take advantage of that retracement. Didn't quite hit the full target, but still banked some nice profit on that. The market has reversed back into this level now, coming down sharply. If we fail to take out these highs, the price could actually come straight back down to the downside and actually go and hit this target. If we reverse and this is just retracement, then the market can definitely go bullish again, take out this high. Now I am expecting the market to come all the way back up here. as for now, the market is respecting that level pretty strongly, so we could continue this bearish momentum quite a while. We'll see what we do in the retracement. If we can retrace, form a lower high, then most likely we will continue to fall. If we just climb back above, then yeah, back to highs will be the target, which is around 97. So AUDJPY probably a pair to watch out for. A move could be developing quite nicely on this one. But yeah, that was the trade that I had. Stop loss, entry, target, trade management. Hope you guys have found some use from the trade and learned something. If you guys want to see some more like videos like this, let me know in the comments, or you got some other video suggestions that you want help on, or just want my view on, let me know in the comments as well. But if you have enjoyed the video, guys, like, subscribe, share, comment, hit the bell, all that good stuff does really help the channel out and obviously keeps you in the loop, so don't miss out on any content in the future. But guys, hope you have enjoyed the video and take care.